There is a very high correlation between small cap, mid cap stocks and that NFIB index. If you look at the annual rate of change, it's very highly correlated. So if we start to see a very big improvement in the NFIB index, that's going to suggest that we're going to continue to see improvement in earnings in small cap, mid cap stocks under economic policies heading into next year. Here's what you need to know before the bell this morning. So the election last night now behind us, Trump the winner of the presidential election. This is sending stocks markedly higher this morning. So yesterday the markets rallied into the election. The market was kind of sniffing out the election yesterday. Last night, futures continued to improve, and as the results of the election became more clear, futures really started to take off. And this morning, the S&P and the NASDAQ are both up about 2% this morning. The Dow's up almost 1,200 points. So they're having a very big jump in the Dow Jones Industrial Average this morning because a lot of the stocks that are in the Dow Jones are more economically sensitive. So the Dow's going to be up 1,200 points, so it's going to be pushing all-time highs today. The S&P and the NASDAQ both are going to have bounced off critical support, and as we talked about yesterday, both the S&P and the NASDAQ held that kind of critical 50-day moving average. They're going to be pushing back up towards previous highs today as well. So very big move today. Now, whether or not we can sustain this all day, that's just going to be the open knee-jerk reaction, right? So traders are just having to pile into markets at the moment. They want to be into stocks at this juncture. And that's putting a lot of upward bias and a lot of upward pressure this morning at the open. Now, unfortunately, if you're not in the market, it's going to be really tough to get in today because all the trading happened overnight. So the markets are going to open up sharply this morning and then probably won't go much of anywhere the rest of the day. I wouldn't expect that anything's possible, but I wouldn't expect this market to open up 1,200 points on the Dow and then be up 1,500 points by the end of the day. That's possible, but most likely we're going to open at the highs of the day, and we may finish close to that level. But this is we'll probably see the high level for the day, and again, we'll kind of check it tomorrow. But we'll probably have seen most of the move today based on this, kind of this outcome. The interesting one is, of course, the Russell 2000, and small cap, mid cap stocks are going to see big moves today. The Russell 2000 is going to be up about 6% here at the open. Again, expectation that there's going to be more pro-economic friendly structures. Now, interestingly enough, the National Federation of Independent Business, that survey that we talk about here from time to time on the show, that is very economically sensitive, and it tends to lean conservative. So that index has been under a lot of pressure. It was previously at some of the lowest levels on record, well into recessionary territory. It's been that way for the last couple of years. And this morning, this change in the election status, I would expect to see that NFIB report when it comes back out. The next reading is going to have a big surge. It's going to have a very optimistic take on the outcome of the election, as the extension of the Tax Cuts and Jobs Act is going to get enshrined, maybe some lower corporate taxes, maybe that comes down the road. There's not, and we'll talk about that with Danny this morning, there's not a lot to happen on the tax front, like in terms of big changes. It's going to be the continuation of those policies that are pro-business friendly. Now, why do I bring this up relating to the small cap? There is a very high correlation between small cap, mid cap stocks and that NFIB index. If you look at the annual rate of change, it's very highly correlated. So if we start to see a very big improvement in the NFIB index, that's going to suggest that we're going to continue to see improvement in earnings in small cap, mid cap stocks under economic policies heading into next year. Now, I will caution you on this. You still need to be wary of small cap, mid cap stocks for two reasons. One, interest rates are still elevated. We'll talk about bonds here in a second. That weighs on their refinancing, and a lot of these companies are non-profitable. So again, while we may see a knee-jerk reaction and a move higher in small cap, mid cap stocks, this would not be an area I would overweight in my portfolio, and I'd be selective if you're buying stocks. Individual stocks in the small cap, mid cap space. Make sure you understand the balance sheets, right? So you don't get in trouble. But again, right now, very bullish setup for small cap, mid cap stocks today. Very bullish setup for the markets in general. And as we talked about yesterday, the issue with, or I shouldn't say the issue, but what's going on now in particular with the S&P, is that as we push out here, we have this kind of rising trend line that we've had going really ever since, and I'll get my screen to work here, thank you. We've had this rising trend line really since back in August, coming off those August lows. That rising trend line intersects right at 6,000 right now. So the expectation is that this market is going to rally and start to trade up through year end towards our target of 6,000, could be 6,100 by year end. And again, the support for that rally is all coming from stock buybacks, now in particular, performance chasing. A lot of managers are on the wrong side of the trade at this point. They're lagging in performance. They're going to have to play catch up. And with this move today, this is really going to put a lot of pressure on managers to get money allocated to markets here over the next 2 months, because they have to have their performance in place for year-end reporting. This is also going to drag a lot of retail money into stocks today as well. So look for stocks like meme stocks and other issues like that to start performing well also. Outside of that, the dollar is rallying extremely strongly today on the back of the news, and we're seeing the dollar is going to have a very big pop this morning, and that's going to be moving higher on expectations of stronger economic policy here in the U.S. We're also going to see the VIX drop sharply this morning. The volatility index has been hanging up around 18, 19. That's going to open at 15 this morning. So it's going to have the volatility index is going to be absolutely crushed today on this news. And lastly, of course, we are going to see interest rates move up today. This is going to be one of the issues that's going to kind of have people worrying, but interest rates are going to pop to about 4.4% this morning on this rotation out of bonds into stocks, shorting the VIX. So we're coming out of that safety trade into the risk trade today, at least. I wouldn't expect this rally to last much longer in yields. We got very, very oversold here on yields back in June, September. We talked about that being a very oversold condition, and that we'd like to see a buy the rumor, sell the news issue on the Fed meeting. We have now reversed that. We're extremely overbought here. So be a little patient with bond holdings. They'll still be working fine into the end of the year, but today is going to be a big rotation in assets across markets. That's what you need to know before the bell this morning.